Well, welcome everyone, and thanks for joining today's session and conversation from data to growth, how banks are turning insight into action in 2026. I'm Lori McLaughlin. I'm Chief Marketing Officer here at Revio Insight, and I'm going to moderate today's conversation. I'm also recording it, so you'll definitely receive an email no later than Monday with a link to this video. And if you have any questions as we go along, there's a Q&A feature at the bottom of your screen. Feel free to submit questions there and we'll make sure to answer them either on the spot or we're going to leave time at the end. And I just wanted to make a brief note. Some of you may have saw that James from First Bank of New Jersey was going to be a panelist today. He had a last minute emergency that he needed to tend to. So we're going to continue with this group, and I know it's going to be an awesome conversation. So just to tee it up, regional and community institutions are competing with megabanks who are now pouring billions of dollars into tech and AI. It's just a crazy advantage that they've managed to gain, particularly in 2025. Fintechs are no different. They've got deep pockets and they're really outspending a lot of traditional institutions. So today is really about what institutions can do to compete and grow with the resources that they have. And I'm really excited to introduce the panelists that have joined me. First up is Lee Lamb. He's the Senior Vice President of Marketing and Brand at CCBank, which is a particularly interesting institution to me anyway. Lee, tell us a little bit about CCBank and how you're different.
It's good to see Lori and all the participants and joining Neil on this panel today. So CCBank is a fast-growing community bank headquartered in a town called Pleasant Grove, Utah, just south of Salt Lake. When I started working with the bank in 2018, we were about 320 million in asset size, and today I think we sit around 1.3 billion to 1.4 billion. Depending on the day, we're kind of fluctuating currently. So a really fast-growing bank in our market. We actually just opened up a new branch, so we're expanding, which is always a good story in community banking. We opened a seventh branch in a town called Spanish Fork, Utah. We expanded the team in that area too to agricultural lending. And yeah, we are. I think anytime you're in a community bank environment, you're always competing with mega banks. You're competing with other retail banks. You're competing with the big box stores that are creating banks. There is competition all around us that we have to consider in our market strategy every single day for sure.
Yeah, well, welcome, Lee. Thanks for joining. And I'd like to introduce everyone to Neil Stanley. He's the CEO and founder of the CorePoint. Neil, just quickly, what does the CorePoint do?
So I established the CorePoint, Lori, after being a bank CEO for several years, and I just observed that the bankers were stuck in yesteryear when it came to how to professionalize retail deposits. So we were doing the things like we had done back in the 1960s and 70s. So we founded the CorePoint to modernize and professionalize deposits.
Great. All right, well, let's dive in. When I think about how growth happens today at financial institutions, it feels a lot different than it was even a few years ago. I alluded to some of that a minute ago with the onset of AI, banks like Chase and Bank of America pouring literally billions and winning the lion's share of new patents in that area. But let's face it, customer expectations have been rising since the dot-com era, right? Every banker has heard that Amazon has redefined expectations. But I just wanted to briefly talk a little bit more tangibly about what that means. And, really just Lee, from your seat, what's changed since you joined CC Bank? And, can you talk about which changes came first, customers, economics, or expectations?
I think that's a really good question to pay attention to. This is actually my second bank. I was at a community bank also in Colorado Springs. I've been in banking for some time, and while I didn't start in banking during ancient Greece times, there were a lot of manual processes to marketing and banking as an industry. And we've changed as the industry along with our customers. Customers, and I talk in lofty terms, so I apologize off the bat here. I mean, a lot of this you kind of have to take as and filter to your own case study, but customers today, from my viewpoint and how I interact with our customers and our prospective customers, is they don't want additional friction. They don't want something else to do. They want you to solve a problem. So I think the customer is changing beyond even at a faster pace than companies or banks can change or the economics that we operate in. It seems like people don't want to shop as much. They have AI agents, they have their phones. They can do the research. They can compare you instantly with other institutions that they're considering. So when they're coming to your website or interacting with your chat bot, or they're calling the branch or interacting with your leadership, they have an idea of what your product suite is. They want to understand the relationship that they're going to have with you, and can they trust you? Are you going to understand their needs, and are you going to make an impact? Either we're primarily a business bank, but we also do consumer lending and consumer banking as well. Do we know them? And I think customers are looking for that. I honestly think it doesn't really matter what size you are. You can be a small business on Main Street or a multinational company. I drive a Jeep and I love Jeep, and I always feel like Jeep is my best friend because when they email me, they know my Jeep and they know what parts I need. And I think that's the magic of branding and marketing today, is kind of like know thy customer and build a relationship with the customer foremost, and solve a problem, and don't add more friction to their afternoon.
So that's a good point. You brought up ancient Greece. Um,
Okay.
I grew up then, but no, and I've said this before, like I sometimes worry when we talk about these things that maybe people shut down because they're so sick of hearing it. But I'm here to say in the early 90s, there was a book published called The One-to-One Future. And it was all about personalization and how it would eventually be one-to-one, which never happened. I mean, marketers, if they're lucky, have really good segmentation. Maybe they've got a next best offer engine. But for those of you, that have joined us, think about whether you really have the ability to do one-to-one personalization and what that would take. I now want to turn to Neil. I mean, when you hear all of this, what does that kind of signal to you about how the growth model has changed for financial institutions, even just over recent years?
Yeah, well, it's very dramatic, Lori, and I'll give you a little background going back even a little further. I started out my career post college as a PhD student, an instructor in economics. So I'm 1 week I am teaching and lecturing graduate level students in finance and economics, and the next week I'm sitting in the community bank as a trainee, and they told me that they didn't want any questions. They only wanted me to listen, learn the regulations, the procedures, and the policies.
Hmm.
And I go, well, how do we grow if we don't take fresh eyes and use the fresh eyes to innovate? And they said, we don't care. Banking has been around for decades, and it's going to just be what it is. I'm like, so everybody who buys into this is saying, I'm willing to forego innovation. Now, that was 1984, so lots of things have changed. But let me also point out something else. It was 20 years ago today, or actually 20 years ago, not today, because it was in June that they released this, but the ACLU released something that they knew would scare people. It was a video on buying pizza in the future. This was 2006. And I remember being in a conference where everybody kind of gasped. And the reason they gasped 20 years ago was that the pizza company that was taking the order knew the medical condition, all of the propensities to buy certain things, the waist size of the buyer, their fitness or lack thereof, and everybody went, "Oh my gosh, they're going to know so much about us. It's scary." How that's flipped. Today, we're not antagonized or irritated that they know us. In fact, we expect them as a consumer, we expect the parties that are selling to us to know us and minimize the friction in dealing with us so that we get what we need, what we want as efficiently as possible. It's changed so much. So when it comes to dealing with helping a bank grow, first of all, we have to accept innovation. I remember when bankers said, I don't know about this debit card thing. It's perfectly fine. What we're doing with checks and cash and ATMs, branches, perfectly fine. They don't need debit cards. Well, seriously, how do you think that would go over today if we said no debit cards anymore? The reality of banking is we have always been slow to adopt as bankers. Now, I'm a banker, so I understand it. And I go, yeah, being regulated does slow down adoption of innovation. And that makes sense. But we have to use the data in our hands to design better, more efficient products and get them to the right people at the right time when it matters to them, as opposed to just broadcast promotions. Those are things that I think are just essential. And when I see like a bank like Lee's that is growing so efficiently and so effectively, it's proof that these kinds of things really work.
Yeah, and I agree with everything you said there about, I think most consumers expect businesses to understand them, and particularly their financial institutions. But I still understand the concern, and I kind of want to turn to the marketer here in the room, Lee. Um, Being a marketer myself, I know it can be challenging to get your mitts on the data you need to really do personalization well. As a marketer, I also happen to know that most of the time banks are not should not be in the business of trying to inspire someone to adopt a brand new product they've never had before. It does happen, people's needs change, but most of the time, the job of frontline teams is to steal share from a competitor.
Mm.
So if a customer of yours has a massive merchant services relationship with someone else and you can offer a bigger deal, that's what cross-selling actually is in this industry. And so I'm just curiously, like in terms of your point of view about what data is important to you as a marketer and your ability, I guess, to get that data, because I know it can be really hard, to get data out of the core or whatever.
Yeah, and we've talked about this in the past, the importance of marketing teams and marketing departments to really focus on their marketing tech stack. And I'm a champion of Revio. I love Revio because it was the first time that our department had access to our core data and information. And the acceleration that we've seen as a team, it's been incredible. We can understand who um, we can pull a list of 200 customers who have merchant services with a competitor or are using an online product that's costing them a lot of money. And we can reach out to them in a really relevant, compelling way in the moment when the opportunity is occurring, and see what they like about that product, but hopefully get them to change to our product. So we have really as a department, as a marketing team, and I would encourage anyone listening to this on this webinar or a future recording of this to really kind of think about it with their marketing department before even expanding their teams. Really focus on how they can evolve their marketing tech stack. And to Neil's point, banks do evolve slow, but that doesn't mean the marketing teams within the banks have to evolve slowly. We can be at the forefront of innovation, and really kind of the definition of a marketing person or a marketing director, if that's your position, is to be a driver of that change. You need to be a change agent. You need to bring in a new risky idea that's not half baked and well thought out. It needs to be able to, you need to be able to like believe in it and it needs to work. Like, like encouraging us to adopt Revio Insights and connect that to HubSpot, which we do. That generates daily deals for our teams on the ground for them to focus on and to convert to new business in their branch offices and on the separate teams that we have scattered kind of throughout Utah. But this conversation about data and how we use data and data integrity and data safety and do customers want us to use their data? And something that Lori and I know we've talked about in the past too is your competitors know your customer. They already have data on your customers. So don't be left in the dark, but also be a trusted source for your customer. If they're your customer, uh, you know, incorporate into your messaging and your marketing that you know you're safe with us. Like we don't sell this data. This isn't on the market. It's it's privatized. We secure it. Not everyone has access to it. Not everyone's looking at your relationship with us. But to Neil's point, I think people really kind of I opt in when I can opt into sharing my information on my phone and a mobile app. I'm always the yes person because that translates to saving time down the road for me that the brand that I'm connecting with can anticipate my needs and match their product or service to help me solve a problem or facilitate my lifestyle in some way. So I think that question is starting to go away a little bit, where we understand what data is as consumers, and we want the brands to interact with to know us on some level. I use not to use another company, but I use the Walmart example or the Amazon example. I think those are great examples of when you log into their system, they have recommendations ready for you. Here's your shopping list. Here you go. And if you want to shop, if you're a shopper, you also have an outlet to spend some time on their app and shop. But if you just want what's for dinner tonight, when you log into Walmart on the app right there, they're like, here you go. Load this into your cart, and do you want to pick up or do you want to deliver to you?
Yeah.
What a great time to live in.
It is. And that point you just ended on, I want to continue a little bit here with the group because a lot of institutions cross-sell inside of digital banking, for example,
Yeah.
or with email marketing. But a lot of times those offers are driven by, you don't have this product, but I know you have this much money, so you qualify for it. It doesn't mean there's a need. And I think that is also speaking to what happens when teams don't have data access. Because what is the data you really, of course, you need to know what they're doing with your institution, but what do you really need? You need to know what they're doing with competitors. And if you can't see what they're doing with competitors, how do you know what they need from you?
I
Um,
heard I heard a phrase yesterday that really strikes on that theme there. So it's not something that I've ever said or thought of, but it's do not do random acts of marketing. It does not work anymore. You really have to stop selling products and start selling the relationship and the impact that you can have on whatever your target audience is. Your strategy really needs to focus on who are you marketing to and what value you can add to that relationship that they're going to start, or if it's a long-standing long-term customer, how do you reinvigorate energy into that relationship? How do you grow that relationship, which is a primary way that we use Revio, and stop as a marketing person or department doing these random things every day. Really focus your attention on knowing who you're marketing to, and have a message of value to that person, and don't try to sell them a product anymore, because it's really kind of going back to what I said earlier. It seems like people aren't shopping anymore. They're looking for relationships, with key brands that solve problems for their families. So I just wanted to add that as kind of something to think about.
Lee,
I
I'm curious if I need to give attribution for using the random acts of marketing. Is that something you need attribution for, or can I just start using it?
So I'm a marketer who's always a student, and I'm taking a marketing class at Purdue. I'll give a shout out to Purdue if there's any Boilermakers on the webinar. And it's actually from my professor, uh, Charles Allred is his name, and
Okay.
he has a marketing class at Purdue he actually
Yeah.
started the conversation with us by saying that, he's like segmentation and
Yeah.
understanding the relationship that you're going to have with your customers is the key to marketing today.
I find that so I was a former bank CEO, and when I would go interact with my team, my commercial lenders never needed an ego boost. They were more than happy to tell me how important they were to the success of our bank. And then I would talk to the people handling $400,000 deposit accounts, and they would say, I'm just a personal banker. And I said, well, I appreciate humility. Humility is fine, but you are a star, and we need to make sure that you don't overly humble your role, because without you properly being equipped and empowered to use all the tools, just like that commercial lender does, we will not succeed. You have to be the professional in the room, just like everybody else. We have no second class citizens in the bank anymore. The idea that the commercial lenders are up here and everybody else is down here, that is not going to work into the future.
I love that. I totally agree with that.
Yeah, so do I. And I love the random acts of marketing terminology. I know that my top 18 bank is not in this room, but they're sending me student loan offers and I don't have kids. So it can really go wrong if you guess. Um, and so I guess I just want to kind of talk about, what we're talking about, which is being able to personalize, be relevant, remove friction. Lee, you alluded to it earlier. Technology is often the enabler of this, right? And so you started to talk about how one of the most important decisions a marketer can make today is in choosing their tech stack. And I'm kind of putting you on the spot here. But do you have any more advice in that area or stories that you can tell about how you made those choices?
Yeah, I mean, I could talk about that all day and just probably get into like the rambling of building out your tech stack and owning, it's we definitely collaborate with all teams internally at our bank, including the IT team, and we want IT and compliance to be comfortable with the technology that we're using. But we really like our department really owns the technology that we want to use to know our customers, to measure their sentiments, to know our market, and to know where our opportunities are. One of the things that I don't want to be, and I if there's any other, I'm sure there's other marketers in here, is I don't want to be the swag guy or the flyer person. I want to be the business enabler. Marketing is a core business function within our organizations. It drives and has an impact on revenue, and we need to really internalize that and believe that as marketers, or our profession is going to disappear really quickly in the AI world. But we use technology to sell things online, to create relationships online, to make an impact online. We use technology to do the same thing in our mobile apps, but the magic behind a community bank and what I think has been kind of the magic of our growth is we create mutually beneficial relationships. We are first and foremost relationship marketers, and we don't want to waste anyone's time, especially a business owner or a small business entrepreneur. We want to know when we schedule a meeting with that person off the website, off the app, and now in person, that we're going to that person and having a conversation that's relevant to them and is not wasting their time. And that starts with knowing their relationship with you, which we pull out of our core data. We know how they're utilizing our products and where they're sending business elsewhere. So when we sit down with that person who has zero time, I mean, these are, if you're, God bless you if you're an entrepreneur or trying to start a business or keep a business running. It's really difficult. You're working around the clock. And the last thing that we want to do as bankers is take up needless time, or we take up time and we don't bring something relevant to the table to talk about. So that kind of starts with like preparing for those meetings or preparing our teams for those meetings. Um, we don't want to operate from spreadsheets. We don't want to operate from post-it notes. We want to operate in a system. And we want to make sure that that system works for us, but it also works for our customer or the prospective customer, where when we meet with them, they're like, these people know banking. They know our market, which is also kind of the magical part of community banking is we know our neighborhoods and the people who live in our neighborhoods. And we know kind of what they're trying to do with their business, or if they're a person or a family unit, we know what lifestyle they're trying to aspire into, and then we can take real solutions to them. And I keep going back to this idea, and I would love to hear from, some people listening to this if they agree with this, but I just really don't think that people are shopping in the traditional sense of rack shopping or bank shopping, like they're going to research you, they're going to research your product, they're going to find out your story and who you are, and are you going to let them share your story as a customer, and sit down with the banker and have that conversation of, here's what I'm trying to do. I'm trying to purchase this business from my parents, or I'm trying to acquire this business from this other person, or I just leased a storefront. I'm trying to build out, my store or my sauna studio or whatever. And they want to have that opportunity of going and sitting down with someone who's credible, knowledgeable, knows the market, and can recommend a solution for them. But if they're not coming to you, you definitely need to go to them with real actionable data, and especially current customers. We need to really focus on, I'm kind of preaching here and I apologize for that, but marketers really get into this kind of, tunnel vision kind of mindset of outside of your company, and building business through new customers. But the cheapest way to market is to build a existing relationship. They're already in the door. So one of the other ways that we use Revio and market to current customers is to understand where they're sending money out the door, and really kind of focusing on, for us, if we're a secondary financial institution for that customer, how do we get them to convert to a primary relationship with us? And that again kind of comes from knowing our core data.
Yeah, really well said. And I just want to tie that back to something you said earlier about privacy concerns. When your meetings go from, let me tell you about our credit card or merchant services, to, how'd you like to save 2 grand a month on merchant services? Because I know you're using Toast. That's a different kind. Yeah, every business owner wants to save thousands a month. I just want to take another moment, remind the audience, you can use the Q&A feature at the bottom of your screen if you'd like. But now I'd like to shift in a different direction. Let's assume clarity has been achieved, right? That you've got instant access to your data, you've got the insights you need. Once you have that, you really do need to determine what to focus on, because choosing a strategy typically means saying no to other things. And so I want to turn the conversation to Neil for a second and ask, where do you see banks responding to pressure in ways that feel short term, okay right now, but end up hurting them in the long term, especially around, everyone wants deposits right now. What have you been observing?
Well, one of the realities of the last 4 years was that we became accustomed prior to that to abnormal interest rates. And those abnormal interest rates were there for so long that we started to think they were normal. And there were bankers, many bankers, who thought they would just wait out the balance sheet and valuation process until interest rates went back to what they thought was normal. So I saw a lot of just sitting like a rabbit. If I don't move, maybe no one will notice me. I'll just sit here in the grass and I'll be fine. And they were the reality of banking. And my team will always tell me things like, Neil, we have to consider everyone uniquely. And I'm going, yes, but as a strategist, there are some known knowns. For example, every bank in the United States has the exact same minimum marginal revenue. Now, that's not a terminology that you probably have heard, but Fed funds is the minimum marginal revenue that every bank can get. If I put $1 in a bank, I don't care where you are, that bank can turn around and put that money to work at Fed funds, or just a little bit lower than the quoted Fed fund rate. So when interest rates started to rise, there were bankers who go, yep, we're just going to opt out. We have a low loan to deposit ratio. We're just going to opt out. We're going to keep all of our cost of funds around 1%. Really? So if I'm a depositor in your bank and you don't want to pay market rates, then what am I going to do? And the reality is that, folks, our world has changed. So in 1981, maybe most people do not realize this today. Before 1981, there were no 401ks. No 401ks that didn't exist. And before that, people thought of themselves as savers because they did not think the stock market or the bond market was for them. They thought that was for ultra rich people. Today, everyone who works has the opportunity through most everyone has a 401k that can be in the stock market, at least at some level. So the idea of the traditional saver, which bankers would cater to, is pretty much gone. Because why would I put my money in your bank, earn nothing just because I know you? And that's kind of the same thing as the local. It's like if you talk to bankers, they'll say, we really love having a local grocery store, yet they shop at Costco. So, yeah, I love local grocery stores too, but I want to make a really good decision when I buy stuff. So, yeah, I'll shop at Costco. And bankers are realizing today, I think more than ever before, that just because you're a local bank and you have some really winsome people, and if you don't have them trained and equipped and empowered to make decisions on the spot that are relevant for the depositor, relevant for the borrower, relevant for the bank, but they're just order takers and product pushers, you're not going to do well. It just doesn't work. So what I think is happening to us, and 26 is so different than 24. 25 was a transitional year. And I know Revio has some really great technology, but AI, generative AI, has changed so much from 24 to 26. Back in the day when AI first came out, at least when my utilization started in 24, I used it to write my wife's birthday note. And it was so wonderful because when my wife read the birthday notes I gave her, she would go, thank you. When it read the interview results that I got after the AI interviewed me, and it asked me about my wife, and then it wrote a card for her, she would go, "Oh."
Oh,
It's like, okay, this AI thing is real. So that was 24. But I started to work with it as a consumer, thinking, oh, if this AI is really powerful, I can use it to negotiate against banks, thinking as a consumer. But it would say things like, most people don't refinance their CDs. Most people, and that was generally right, right? But today, you know what AI does when you give it hard financial questions? It runs the numbers. Just like a CFO, somebody who's had a CFA training, it says, given this situation, here's what's relevant. Here's what you should do. By the way, would you like some recommendations as to where to get that done? Folks, this is a huge different world. And we need systems like Revio to have the ability to know the right things at the right time and be able to deliver it to the right people so that when we interact with them, we are experts, not just product pushers and order takers, because too often people get frustrated with the classic checking, saving CDs, consumer loans. They know what banks offer. Why are you bothering me with this? unless it's something that is unique, something that is personalized, fitting to my situation. Lori, I wrote a publication that came out in December in the Financial Brand, and it was on personalization didn't save bank deposits, but product customization can. And so these are two things that need to fit together. It's not just having lots of messages going out, it's having a product that people go, now that fits. That's what I'm looking for. If you're simply pushing product, you're just taking up space in their world. But if you're solving a problem, how do we solve problems for people? And so, like in my world, what we do is we solve problems for long-term savers. Now, if you're a saver, what do you know? You know you want to have your savings grow faster than they would otherwise. So you're asking about interest rates. So every person I know, my family, my cousins, everyone who has some money, they will call the bank and say, what's your special? Well, we have a 7 month CD special that pays this rate. Talk about commoditization. Like, well, if that's all I'm supposed to deal with, then I want to know what everybody else's 7 month special is. And
Yeah.
bankers are falling flat on their face trying to outbid for business. And what
Yeah.
we know is that if you redesign the product, you can get people to say, wow, now you get it. Now you understand. That's what companion accounts do. That's what limited edition savings accounts do. These aren't just generic money market accounts. They are specially designed products that work with a data system like yours. When the right situation pops up, you present them with something that they go, oh, that's going to solve a problem. That's a solution to a pain point. That's what is really moving the market today.
Yeah, thanks for that. I I definitely agree with you about product customization, about people, unfortunately, a lot of products in banking have become commoditized where people are comparing rates and fees. But you're kind of leading me, I think the way you phrase that is leading me into one of our final topics before the Q&A, and we'll probably wrap up a few minutes early, which is, you know, we began today talking about how it's gotten harder for financial institutions to grow, how they're being way outspent by mega banks and fintechs, and focus and clarity is really what they need to pull ahead. And so I want to put Lee on the spot again, talking to this audience who are probably just all cooked up their 2026 plans. What is one habit that you think banks should break? Like that they just need to stop doing in order to really succeed in 2026? Do you have anything that comes to mind? And then I'm going to ask you
Yeah,
for the opposite of that question.
I love that question, and I actually am going to kind of bridge to what Neil was just talking about. And I know that no one wants to go back to this year, but I'm going to take us back because I think that this is kind of like a marker in banking of like when the perception of what a bank can do for you changed, and that was COVID and payroll PPP loans really kind of shifted the mindset. Business owners have personal accounts too. So business owner, like if you're a business bank, they also have personal checking accounts as well. So I talk about business accounts because that's our primary customer. But globally, I think PPP loans and that environment of, man, this bank is going to change the way I can do business or stay alive or stay afloat, really change people's perception of I drive by that every single day on my way to Starbucks, and I have no clue what that bank does or who they are, and I don't want to find out. Two, now today, I think AI definitely facilitates this. I want to find out what that bank is, and I want to find out who's inside that bank, and I want to find out what they do because I'm going to probably need them someday. And that changes to us, like what can bankers do today to facilitate to leverage that opportunity of the reputation that banks had, pre-COVID, pre-2020 was, let's be honest, banks didn't have a great reputation. Today, I think banks do have a good reputation as economic drivers in cities and towns, drivers of business growth or facilitators. I keep saying this term, facilitators of your lifestyle. And I think the one sort of bad habit, let me get a little luxury here, and I apologize for being this way, but quit selling to meet a quota. Your bank's profitability is going to happen if you make an impact at the individual level, with the business or with the community that you're trying to serve. Even if you're a mega bank, mega banks play a really important role in the financial system. We compete with mega banks, but we also partner with mega banks on some things. The banking system at large is a good thing for all of us if we're a business or a consumer customer. And if we're bankers trying to make that connection of we're here to solve a problem, or facilitate a lifestyle or change of credit or help you purchase an RV or a new car or whatever, we're good people, you're good people. We want to tell our story, we want to hear your story, and quit operating in this environment of this person that walks into my teller stand today is going to help me. If I have my goal today is 15 new checking accounts, this is one of the 15 new checking accounts I can open. Take a breath, greet the person, and find out what they're trying to do, and the sell will happen. And then just a good habit to develop. And I think this is kind of where Revio comes in and helps us facilitate at our team level, is start your day with a deal you can leverage. Get rid of the spreadsheets, get rid of the post-it notes in the drawer. I've even seen, bankers or loan officers have their legal pad with the 5 or 10 people they want to, switch over this year, and get into your data, understand who your customers are, which is, surprisingly unfamiliar to a lot of bankers, which is that's strange to me, and know where they're sending money outside of the bank, and make that connection of, did you know that you can do that here? And I mean, the number of conversations that we have of, I didn't know you guys did that. That's why I'm not doing that with you, is really surprising. And it's really driving our growth, our core deposit growth, is just making that connection with our customers of, did you know we do that? Did you know that we do that really well? Or did you know that we can save you a lot of money because you're doing that with someone else or in a more costly environment for you? And let's sit down and take a look at what you're trying to do and save you some money. And when you're having those conversations and telling that story of, I'm here to make an impact and not sell you something, it's ironic that the sell happens much more easily and efficient than if you were to, like, help me meet my quota today and fill out this loan application.
That
Love that,
is
Lee. Love that.
really good advice. And even outside of banking, I'm sure everyone has a certain feeling when they walk into a place and they can tell if the salespeople have quotas or not. So I think that's really outstanding advice. Neil, in closing, or as we move to close here, do you have any quick words of wisdom for those on the line about what to stop doing in 2026 to pull ahead?
Well, I think the industry has gotten used to the idea that technology is something that we need to install. We'll let the fintechs be our research and development arm, and then we are going to install technology to save money. Okay. So I lead the Sheshnoff CEO Idea Exchange. And so every spring and every fall, we get about 120 people who come in groups of about 12. And we meet in small groups and we talk about what's going on. And many of them are like Lee's Bank, very, very forward looking, like growing, good, great C-suite leadership. But it's so interesting to hear the bankers talk about AI. And you can just feel the resistance to harness technology. Now, I'm going to use different words than most bankers would use. Most bankers would talk about installing AI, having it do work for the bank, having it be a cost saving initiative. And I'm like, okay, that's certainly an aspect of AI. But the reality is today, AI is a very powerful thing. And if you think it's technology that you're going to install, you really need to shift that to it's a workforce that you're going to engage. And so, what Revio has here to me is a workforce that our workforce can engage if I'm a banker and amplify the results, the success of all of our workforce with technology being a part of that as opposed to a substitute for it. Years ago, when I was in the bank, our bank's name was Northwest. So I'm telling you that because you can see the first letter was N. And we had a lean initiative, and I think everybody today knows what lean stands for. But somebody in the bank said, Neil, you do realize that when you talk about lean, all people here, the employees here, is less employees at Northwest. That's what they thought lean meant. And I kept saying, no, it's about us harnessing the tools so that we can do more, that we can accomplish more, that we can serve more, that we can benefit more, not only the bank and the shareholders, the employees, and all of our clients. And too many people think of it as us or them. It's either people or it's technology. It can't be a dichotomy. So that to me is a habit that bankers have, is thinking about this dichotomy of we're either going to have people or technology. It's empowering and equipping your people to use and engage technology in such a way that it's part of your workforce. So that's a very high level. And then I could get much more granular because I can just tell you that every bank, unless you are a very odd exception. In other words, there are 4,300 banks, 4,400 credit unions. Unless you are like a very, very rare person or very, very rare entity, you have irrational, yes, you heard me, irrational products. If you have a term deposit that's based upon X months of interest as the early withdrawal, and it doesn't matter if it's the day after you open the account or the day before the account matures, that's irrational, folks. It's not financially viable. And the only reason you do it like that, it was like that when you came to the bank, and you just keep doing it. It's this perpetuation of the status quo from before I was born, and I was born in the 50s, if that tells you how old I am. So this is the thing that bankers are going to have to break through. And I can tell you, I think that in the future, when somebody refers to the Roaring '20s, they're not going to be thinking of the 1900s.
Yeah,
These will be called the Roaring '20s.
I think that's outstanding advice actually from both of you. And, particularly that point that I guess we didn't really hit on earlier, which is this tension between workforce and AI and workers being nervous sometimes. That's not the way we obviously see it, us around this virtual table. AI has, gosh, just such enormous promise to take busy work away from people so they can focus on valuable work. I'm going to end with my advice for 2026, and then we're going to say our goodbyes. I didn't plan to go, but what the heck? My advice is not to let IT be the gatekeeper of your data. And if you have to file IT tickets to figure out what's going on in your core system, uh, you've got a problem. And if you want to talk to us about how we can help with that, we're launching the industry's first way to chat directly with your core system, just like you'd have a conversation. So anything that's in your core data, you can have AI run analysis, create tasks, and identify opportunities and risks. So that's a good example of where AI allows human beings to do the deep thinking and focus on building those relationships that they do really well. Um, I just want to thank the audience for coming. And I especially want to thank Lee and Neil for sharing, gosh, just such tremendous wisdom. I really appreciate it. And to everyone on the call, you will be receiving an email by Monday with a recording. And if you're interested in chatting, just reach out. Thanks, everyone, and I hope you have an awesome day.
Thank you,
Thank
Lori.
you.